Rick here. Happy Monday the 12th. Okay, welcome everybody. In this definitely changing market, we are very fortunate today to have Ashlee Tietgen. Ashlee, if you could hit *6 on your phone, that'll unmute you. As you can hear, there are more people coming on, and it just gets a little noisy. *6, and then we'll be able to hear you.
Okay, good morning.
There she is. All right, Ashlee, well, welcome. And start off by telling us a little about yourself, maybe what market you're in for prosperity so everybody knows, all that good stuff, please.
Hi, thank you. Yes, I am in the Phoenix market. I sit in the Biltmore area and also cover the Mesa and Chandler area.
Nice.
Yes.
Beautiful areas.
Love it. Sunny every day.
All right. And what's that? Say that again.
Sunny every day.
Except for, I was going to say same for Vegas, but except for today, because today, not so sunny here. All right. So tell me a little about yourself. How long you've been doing this, and a little bit. Just give us a little story about Ashlee, please.
Sure. I've been doing mortgages since 2005. I moved to Phoenix from Kansas City, and I initially was leasing out condos up in North Scottsdale in the Grayhawk area. And I was driving a guy around in a golf cart one day, and he said, "You should come do mortgages." And I thought he was crazy. I said, "Ooh, corporate America, ooh." But here I am, like 17 years later, loving every minute.
Wow, that's awesome. Yeah, you know, and I hear that a lot about people, how they get into real estate or how they get into mortgages. And, you know, it's usually, for most people, it's not their first career. For me, it was. I was weird. But for most people, it's not. They were doing something else first and then stumbled into one or the other. So tell us about prosperity. How do you like prosperity? I mean, I've been hearing some really good things.
I am absolutely loving it. I tell you what, you know, just having the team behind us, they're amazing, and not having to push out documents once we are clear to close is such a wonderful feeling.
Yeah. You guys have like a seamless process, which is good. Tell them a little about that so they understand what you mean by that, please.
Well, we have a goal of getting these files through underwriting ahead of time, and even if we don't, things are just processed so quickly behind the scenes. But we have a strong business ethic of never letting things sit and tackling them quickly, and, you know, just pushing them through quickly. It's a nice thing to have the closing and underwriting department asking me, "Are we ready to push out docs? Can we push out docs?" Right? Rather than the opposite. It's just
right.
really nice.
I got you. Okay. All right, good. Good. And I'm sure you've never heard this recently. What are the rates currently right now?
Well, of course, they change daily. They're, you know, in the mid-5s with 0 points, I would say, on a 30-year fixed. And, of course, there's been a lot of talk about discount points and what is that? Points being prepaid interest we can do at closing to buy a lower rate in payment. And that is helping with the rate shock and helping people qualify as well.
Right. Yeah. So, and we've been talking a lot about that lately as far as with listing property. Instead of getting the seller to lower the price, you could always add in seller-funded rate lock, which, and I know, what can you buy it down today? Half, 3/4, maybe even a point if you wanted to, right?
Yeah, usually a rule of thumb is a whole 1 point being 1% of the loan amount. We'll buy the rate down about 1/4%, maybe a little more. So if to get it down full percent, it may be 2 to 3 points.
I got you.
It definitely
to get it down
sense.
a whole. Yeah, and it makes the property more attractive too, I think.
Yeah, and if somebody's going to stay in the home a long time, it makes sense.
Right. Right, because but let's say you buy it down half a point and you go from 5.5 to 5. Historically that's a pretty good rate. I know a lot of people are spoiled by the 3%ers or 3.25 of not too long ago, but that's all changed. I mean, we've gone from a pretty crazy, incredible market to record inflation. There's a lot of reasons why. I'm not going to get into it, but I think. Okay, we're heading towards a little bit of a run in the next few years too. And aren't they also predicting that rates are going to come down sometime next year?
That's what we hear. And, you know, I love the phrase, you marry the house, you date the rate.
Yeah.
Because chances are we may end up refinancing several of these people that we're getting into their new homes right now.
Right. That's a good point. You know, you buy the rate now. And I look at when I bought in 1985, I think it was my first house in 1985. The rate was I got a 1-year ARM at 9.99, and then guess what? 1 year later, it was 11.99, right? So and then I refinanced like 3 years later to a fixed rate when the rates finally came down decently. So the market still moves even when the rates are a little. It just takes a little while for people to adjust to them, but you know, we were spoiled. I mean, I've been doing this 38 years. I have never seen money that was free. And when you get a mortgage at 3%, 3.25%, even 4%, that's basically free. I mean, half of your payment almost from the beginning goes towards principal reduction, which is almost unheard of.
Right. Yeah, when I got my first home, 2007, I did an 80-15-5. So I put down 5%, did an 80% first, 15% home equity. My first rate was over 6%, and my second rate was double digits, over 10%.
Right. I remember those. Yep. It was crazy financing prior to the big crash. Or by the way, everybody, if you haven't seen the movie The Big Short, even though do not think that's coming, but that explains what happens in 2007 and 8, the Great Recession, as it's called now, which it really was. And there's a lot of reasons why, and a lot of those reasons are not going on right now. So take them through the buy down. Okay, so I'm a seller, and I want to buy down the rate a half a point. Okay, so in today's world, what would that cost? Let's say my house is, let's just use the average, $500,000. House is $500,000, and I want to factor in within my price $500,000. I want to factor in the buy down. What's that going to cost me right now?
Well, the buyer may be putting down 20%. They may be putting down 5%, in the point or percentage of the loan amount. So if they're putting down, let's just say they're first timers, they're putting down 5%. Their mortgage is $475,000. Then getting it down to 0.5%, let's say that costs 2 points, would be about $9,500.
So about $9,500 buys the rate down 0.5 point for me, which is a decent amount. I mean, so you go from 5.5 to 5.
Yeah, and depending on the down payment amount, that determines how much we can get from the seller. But 3% from the seller is still $15,000. So I don't, it's going to be hard to hit that cap anyway.
Right. So you can go up to 3%.
Kind of a moot point.
Yeah, it actually sounds better when you say 3% versus $9,500.
Yeah. So 2% of the loan amount would get it down about 0.5%, and we're allowed to get up to 3% from the seller, or even more if they're putting more down. So there's very few times we're ever going to hit that cap anyway.
Right. And those are lending guidelines, just so everybody understands.
Right.
Okay. So how have you guys, I mean, I know we had a pretty slow, especially beginning of summer, but how are you guys doing now? Are you seeing a big increase in mortgage applications?
It's pretty steady. I wouldn't say that we're so busy that we're losing our minds,
Not like earlier this year, right?
Right. It's definitely still steady. We're doing pre-quals on the weekends and, getting requests daily for pre-quals for sure.
Good.
And a lot of people.
Good. And tell them a little about that. Oh, go ahead. I'm sorry. I cut you off.
Oh, no. I was just going to say, a lot of times we start these conversations early. They may not be ready to pre-qual yet. We may be working on certain things on their credit and just starting the conversations. You know, I'm not going to rush someone to go pull their credit if we're not quite ready. We like to kind of have a conversation first, and then once we do pull credit, it's good for 4 months. It's a long time. That would take us past New Year's right now.
Right. Right. And so now the credit score that I see with my credit cards, how accurate is that one?
Oh, you bring up such a good point. When you look at your credit card apps, it tells you, quote, credit score. If you look at the fine print, it's actually a Vantage score, which is a great simulator tool to see if your score is going up or down, but it is not your true FICO or Beacon score. The best ways, in my opinion, to get your true credit scores are through 2 apps. One is the Experian app, and the Credit Karma app will give you the other 2 credit bureaus, the Equifax and the TransUnion, and those give you the true FICO or Beacon scores, which is what we pull, all 3, and we use the middle score of those 3.
Yeah, so not you throw out the high, throw out the low. It's usually the middle one. And okay, good. So the credit card score you see, is it normally a little high or a little low, or is it not even really relevant?
It's a little higher than typically the true FICO or Beacon score.
Okay. So so people come in, they go, well, my credit card told me I was 750. This says I'm 735.
All the time. All the time.
Right.
That's why we like to have those conversations early.
Right. And what is that one? What is one of them one called? Capital One credit card can't be wrong. Anyway, I hear you.
Yes.
So you brought up a really good point too about pre-qualified or pre-committed. You know, that when you guys give them the guarantee, tell them a little about that and how that process works, because I think that's really impressive when you're presenting offers. Well,
we want to give a pre-qual that will turn into keys at the end, right? No hiccups. So no surprises. Right. And, you know, even if we've been doing this job a long time, there's still this extra comfort of knowing, hey, look, it's not just me telling you that you're okay. We have a full stamp of approval. Like, as long as you don't lose your job, I mean, you're getting this loan at the end of the day. And, you know, with the fluctuating rates, it is lovely to be able to offer a lock, even if they don't have a home picked out. We can lock up to 90 days on a TBD property. You know, and it's up to the client whether they take advantage of that, but it's just great to be able to offer that for the peace of mind. And once we get that full loan commitment, we know exactly what else we may need to get cleared to close, right? Like, we try to think of everything we may need. And underwriting might want an explanation for this or that, and we can knock it out before we have an offer accepted. Arizona, we have a pre-qual form that we fill out, so it allows us to add that extra verbiage on the pre-qual form that this person is actually fully through underwriting, not just a pre-qual. So yeah, it really can help.
And I think in Arizona, that's part of the offer, isn't it? You have to have that as part of your offer.
Absolutely. You can't make an offer without it. So you can try, but good luck.
Yeah, so I like that when you go in with your, I don't know what it is with agents getting their buyers pre-qualified, up to as much as they can. I don't know what the aversion to that is, because to me it's like lying to yourself and to them, because if you're out there rocking and rolling and not showing them stuff, plus when they get to an offer situation, they're behind the 8 ball. It's good to get them going right away. And like you said earlier, Ashlee, like I know I use John. I'm right here in the St. Rose office, corporate headquarters. I've been here for 8 years. John's been with, a few mortgage companies. And obviously we all love the fact that Prosperity is owned by corporate, and so are we. So this is it. This is the team that's staying. And to me, it's an all-star team of people that have been made up, over the course of the years. But I know with John, like I've sent several of my friends to him, and And, if they have an issue, like he fixed my credit report. He told me to do something, and this was like 7 years ago. I'm like, wow, I didn't even know that was on there. And it changed my credit score. So before I refinanced, I got a better rate. But there's a lot of little intricacies, and if you have somebody that comes in and they need help, someone to sit down and counsel them as to, okay, here's what you need to do first before we, and so I think that's very, very useful, don't you?
Absolutely. I just had a gal the other day that had a 675 score that she knew because she's been monitoring it through the right places. And I said, you just paid down your credit cards. Let's give it another week or two. You're monitoring it. Once it hits that 680, let's go ahead and rock and roll. Because these rates go in kind of like 20-point increments. So if we can get to a 680 or 700, not only can that help get them a lower rate or cheaper points, but it can also give them a lower rate on their PMI. If they're doing less than 20% down, it may save her $50 a month just by waiting until she has that 680.
Right. Good. Yeah. So go ahead. I'm sorry.
I'm so sorry. No, it's just scary to think we have people's lives in our hands here,
I was just going to say that. It was funny. We think alike. I was just going to say that, when they buy a home, like you say, they marry the home and they date the rate. I love that. I'll be using that, just so you know, Ashlee. Yes.
Yes. Love
and I think that's why I got into this business. I was like, this is a pretty incredible thing. Like, it's the place where they get married, raise their family. It's their largest asset. A lot of people, it's their retirement fund. It's a pretty amazing thing. And it's kind of like when you start your retirement fund with mutual funds or index funds, go index, everybody. And the reason you go index is because the expense of the fund is almost non-existent, which gets into your return. So the difference between half a point or this rate or that rate is ginormous if you don't do it right over the course of a 30-year mortgage. Even 15 years, it's still big.
Absolutely.
All right. So what do you guys, you see the rates holding steady to the end of the year? And I know there's no crystal ball, but they're talking about them maybe in the first quarter coming down a little bit.
That's what I'm thinking too. I think we're going to still try to curb this inflation for a little while longer.
I know it.
And then we may see some relief in the mortgage-backed security bond market. We like to see the price of the bond go up.
Right. Well, we've set some records in the last couple of years. Number one, record inflation. Number two, we've never in the history of our country have we had 2.75 base rate increases in one. The only other time it happened before was 1994, once, but it wasn't preceded by a half a point, then 3/4 point, then 3/4 point. And they're talking, it's like they can't figure out how, and this is the funny part to me, is they're saying we're not in a recession. Well, yes, we are. 2 negative GDPs in 2 quarters is technically a recession. And how can you expect the market to not be in a recession when you're intentionally slowing it down by raising the base rate? Crazy. I don't understand. I mean, I understand the concept of easing it up and slowing stuff down, but slamming the door or putting a stick in the spokes. But that's where we're at. And even with them doing that, Ashlee, market's still still churning along, isn't it?
Oh yeah. I mean, people need to move. They need homes, and the dial can however we want as far as the Fed. They can keep buying mortgage-backed securities and this and that, and keep fluctuating the market. But at the end of the day, people need to move. I mean, they're relocating. They're moving here to work at hospitals, or there's a plant being built out here right now that's going to draw thousands of people here probably. So we do have a strong job market, and
we do.
People need homes.
Yeah, that's why I think the Fed thinks they can get away with it, because everything is so strong that a good stick in the spokes won't kill it. But I don't understand. Like, if you're running a company, you do not do this to your company, but to a country. Right? And their thinking is, well, this is what we did in the 70s, the last time this happened. Well, times are a little different. But anyway, I'm sure we'll come out of it fine. The real estate market, fortunately for us, is still trudging along well. We've had incredible 4 years in a row, which has been ridiculous. And except for the last 4 months, the 18 months before that were the most incredible 18 months in the history of real estate. So I'm assuming we're going to level off. Appreciation is going to go back to someplace like between 3 to 5. Interest rates will float around where they are, maybe dip up and down a little bit. But, okay, so I'm a buyer today, and I want to go out and start looking, okay? I want to use Prosperity.
Yeah.
What's the first thing I should do with you, Ashlee?
We should just have a conversation and talk about your timing, when you're looking to get keys, and then we're going to time it to where we pre-qualify you in a time in which, you know, we only have to pull your credit one time, right? So if your lease is up in December, let's go now and get you pre-qualified now. We do so many things electronically, which is amazing. So where I used to tell people, oh, go gather all your paperwork, your pay stubs and stuff, I don't really do that anymore. Now we start the pre-qualification questionnaire online and just kickstart that online quickly so that we can reach out to the employer and see, do we get a written verification of employment? And then we don't even need any paperwork from that person. Same thing with bank statements. We can verify electronically a lot of times. So where I do it a little bit backwards now, where I used to collect all the paperwork, now I start with a pre-qualification questionnaire, get the credit in when we're ready, and then if we can pull things electronically, great. And of course, if they're self-employed, we need tax returns. But we have this thing called Accelerate, which is green, 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 meaning we get a green credit, we get the electronic income and electronic paperwork or asset paperwork. And we don't even go to a regular processor at that point behind the scenes. They are straight to underwriting without even any other buttons being pushed.
Awesome. I love it. So there you go. All right. Well, I just want to say, Ashlee, I mean, you know what? I really appreciate our relationship, Berkshire Hathaway and now Prosperity Mortgage. I think I've met a lot of the people that are involved, like yourself included, are, you know, dynamite loan originators. It's a dynamite company. You guys have incredible programs. So everybody give them a shout first, which is what I would recommend. I love the team concept, always have. I was doing this team concept when I was selling in, you know, 87, 88, 89, 90, before they even had a term for it. You know, business relationships and RESPA and so forth got involved. But it just makes sense because when you have somebody on your team, you want to make sure that, like you said, you take them through the process, pull their credit when necessary and so forth, coach them to do the right thing, have all kinds of options when necessary. You guys have a lot of great programs. So I just want to say thank you, Ashlee, for taking your time out today. Any final words you want to leave these lovely people?
Oh, just thank you. Thank you for your partnership. And just know that we're available for you anytime. You can call or text us 10 o'clock at night. We're here for you.
And you're mostly in Todd and Rob's office, right?
Yes, that's right.
Yeah. Know them well. All right. Well, I love that area. That's a really nice area of Arizona too. So you picked a really good spot.
Oh, well, maybe it takes me, but either way, I'm happy to be here.
All right, Ashlee. Well, thank you very much. Look forward to seeing you soon, and we'll talk soon, everybody. Thank you.
Sounds good, Rick. Thank you.
Bye, Ashlee. Bye, everybody.